In this video, traders, we're going to look at how long should you stick with a losing strategy before switching. Stick around. Hey guys, warm welcome to you. All right, so this is a pretty decent question. I think it's like, how long should you stick with the strategy and keep trading it until you switch and do something else? There's probably a couple of angles to attack here. And as usual, guys, I try and keep these videos brief so that you get some ideas and ways to maybe think about things without kind of over laboring the point and getting some of my opinion on stuff. So, you know, I appreciate your support. Anyway, guys, a lot of you agree with me a lot of the time, but sometimes you disagree with me, and that's good. Having some discussion is great. There's no right way to trade. So the way I think about this is really from this kind of point, if you like, is you can extract value from any strategy. And I believe that to be the case, because imagine if you had a strategy that's the worst strategy ever. Well, if you entered when you exited and you exited when you entered, you went long, went short, and short, long, etc. You flipped it all around its head, it will be profitable, and anywhere in between. If it's super profitable, great. If it's super unprofitable, great. Now, of course, if it's a highly aggressive scalping strategy and it's commissions, that's a different thing, but there's always nuggets of value to be had from a strategy. So my thought on this is this, guys, is that you should execute at least 30 trades. Now, some of you are going to be like, oh, that's a ridiculous sample size, it should be way more than that, and I don't disagree. And others say, well, that takes me too long. If I'm swing trading, you know, doing one trade a week is going to take me ages. You know, this is where you kind of got to play the game yourself and decide what the best thing to do is. The point is you don't want to do just a couple of trades and start changing things based on a couple of trades, because a couple of trades, there's luck involved in it. There's all sorts of randomized niche to the trade. But at the same time, you know, I'm not a big advocate of just spending days and days and days and days and days, you know, multiple occurrences of the same trade to get data, because also, let's not forget the variable we forget about is the market conditions change. So you have to make sure the strategy is being used in the right market conditions, or the market conditions that you agree on. So the trend trading strategy, maybe ADX has got to be above a certain number, whatever. So make sure the conditions are the same. But the point is just to have a good number. I think 30 is a good number. If you're swing trading, maybe you do kind of 5 or 6 trades a week, something like that, maybe a bit more, then that's enough time. If you're a day trader, maybe you're doing kind of 3 or 4 trades a day, that's enough time. 30 trades, give or take. Again, this is not precise, but give you some data. But then from that data, you go, okay, I've got a losing strategy. Let's assume you've got a losing strategy. That's the point of the video. How long do you stick with it before switching? Now you go, right, what do I need to do with this strategy? Is it completely pointless, or is there something to do with it? Is there something with some value from it, should I say? So you start to look at, okay, what sort of risk was I taking with the strategy? Because some strategies, whether they're profitable or not, you know that there's, you know, inherent risk to it. You know, if you're constantly scaling into a trade, for example, constantly adding to a position, there's so many things we talked about where there's stupid risk in it, you might want to dump it. But let's say, okay, what sort of risk was I taking in this strategy? How wide was the stop? You know, how much risk do I need to take per trade? Now, most of us will have a standardized kind of risk. We're risking this, we're putting our stop in a position, so it might not be so important. But then we start to look at reward in terms of, you know, when the trade was right, how much money did I make? Now, was that you, again, let's just define this, was that you jumping the gun with the strategy? Was that you taking trades off, taking the trade off the table too early, or was it the actual strategy? Did you have that as a target and you let that target get hit? A subtle distinction and important to note. You know, if you're overriding the rules of it, then this is where I say, you know, you've got to just say, I'm going to stick to the rules for 30 trades, 30 trades, 30 trades, because then at least you're going to get data. And then you can start to say, okay, what's the risk? What's the reward? What's the profit I made out of it? What was the loss? And then you're starting to look and say, okay, well, you know, what's the maximum adverse excursion? We talked about this before. In other words, how far does the trade go against you before it comes back? Now, this might say, okay, well, actually, what I need to do is I can be a little bit later with my entry because I'm getting quite a lot of heat before the trade goes in my direction. Maximum favorable excursion, you know, if that is quite high compared to the profit you're taking, then maybe you're leaving a lot on the table. If it's the same as the profit you're taking, maybe then afterwards the trade's going on. That's when we start to look at before and after movement. So I don't want to get into bogged down to details with this because it's not really the topic of the video. The topic of the video is how long you should stick with it. I think in summary, guys, look at 30 trades and again, play around this number, but take that for now, 30 trades, and rather than just discarding it and going, I've lost money, look at it and look at if you could make an easy tweak to the strategy, would it become profitable? Example, hey, I'm using a 20 pip stop on the cable, see a cable trader. If I'd used a 30 pip stop, that would have now been a profitable strategy. If I'd used a 50 pip stop, I wouldn't have got stopped, but then with my targets, I would. So are there any little small levers you can immediately do, change and tweak and adjust to have a positive impact on the strategy and influence the strategy and make it profitable? Because sometimes there are. Sometimes you look at it and go, hey, you know what? If I just had this filter that stopped me taking these trades, that would be better. Now, of course, you're using a very relatively small sample size, but the point is, what I don't want to do is to take a strategy that's effective and chuck it away just because it's ineffective by small adjustments, or even worse, the conditions are wrong. There's so many strategies that are so powerful in the right conditions that are just going to get chewed up and spat out in the wrong conditions. Buying pullbacks, range bound market, you're going to get hammered. Buying breakouts, range bound market, you're going to get hammered. Mean reversion, range bound market, great. Mean reversion, trending market, no. So the strategy fits with the conditions, number one, and look at the conditions. Have been objective and going, is it a trending market? Well, it is. Okay, so that trend strategy should work, but it's not. So why isn't it working? I'm getting stopped out and it's just going in my direction. So a wider stop, a later entry, and iterate on the strategy. And if it's completely done strategy and you can't iterate, there's no kind of light in the tunnel, then start again, start from scratch. But that's rare. Most of the time, if you're buying pullbacks, you've got to buy a pullback buy strategy, then there's something to adjust to make that work. And one thing I would say finally, guys, if you've got indicators on and it's not working, take them off. I'm a guy, I'm a pure, I like a naked chart. I don't like anything on it. Now and then I'll have a couple of indicators. I think I've got 2 setups where I put the indicator on specifically for that. It comes straight off because I like to see price. I like to see price in its purest form. And that's just my personal preference. I know that that's not for everybody. That's my personal preference, how I like to look at stones, but I like to look at things. But I would suggest, if you are struggling with a strategy and it's not working, just peel off the indicators and look at it objectively, and look at it and say, I'm trying to buy pullbacks, I'm timing it with a stochastic or a moving average or MACD at the moment. How can I time it with price? How can I use price as a way to get in? And then starting that as a foundation. Do your 30 trades, see what's working, see what's not. Try to eliminate the biggest losers. How can I move forward by eliminating those? Great. How can I now move forward and maximizing the winners? And use that and just keep iterating and iterating and iterating. So, short answer, how long I think is 30 trades, but don't just discard it. Have a look at all the results of it. Dig down to the homework time and see if you can find some nuggets in there and some levers and dials you can move very slightly to make it into a profitable strategy. Take care, guys. See you next one. Bye-bye.